Good. So I hope all of us were all well. Hope all of us were all well wherever we are. So my name is CPA Ringo, and I'll be guiding you throughout this course. That is advanced taxation, one of the most interesting, of course, unit. And I know all of us doing taxation, we have taken it as a part of our specialization, and there is a reason why we've taken advanced taxation as part of our specialization. So as I've always mentioned, for any class that I normally tend to start, of course, this is our first class of advanced taxation. So for every class that I always start, I am a believer. I really do believe in God a lot. So I normally want to start a class, of course, by praying to God to, of course, grant us His grace. We want to pray to God to grant us His wisdom. We also want to pray to God to grant us good health and life during this semester. So as you're starting our semester, these are our prayers that God should take us through, of course, any barriers that might come along as you are starting this semester. So this is our prayer, and He's a faithful God, and He's going to answer our prayers. So as you are starting advanced taxation, as I've mentioned that this is basically one of the specialization paper that we have, and we must have selected it, of course, for a reason. And I can assure you, the selection that we've done, that is a very, very good selection. Advanced taxation, you realize that it is very interesting and it has a wider scope when it comes to matters of us applying, of course, in the practical manner. So at this level, we must understand that when we are looking at, sorry, I was not recording. So we must understand that when you are looking at tax, one thing that we must be able to understand being in advanced level, and this is only the summary that we have in advanced level. In advanced level, we have 6 papers actually, amongst 7. So we have compulsory papers. So in our compulsory papers, this is what we have. I know you must have this. So compulsory papers, we normally have, of course, number 1, that is leadership and management. We have, of course, advanced financial reporting. We have advanced financial management. We have, of course, the aspect to do with advanced management accounting. So you find that these are compulsory. You must do them. Then, on the other hand, we have these 3 papers between advanced taxation, advanced auditing and assurance, and of course, advanced public financial management. So of these 3 papers, you can either select one or you can do double specialization. So you can either select one paper or you can decide to take double specialization. So that is to say, by the time you are through this, at least you must have done either 5, if at all you've taken note, double specialization. And we are in this class now, advanced taxation, meaning that whatever that we might have selected, it is advanced tax, and this is what we'll be analyzing. So looking at advanced taxation, you'll find that it is a practical paper, very, very practical. And why am I saying that it's a practical paper? Because what we are going to look more so at this level is what normally tends to, of course, be applied, of course, outside there. So in this case, the first session is always a matter of us understanding the overview, what we are expected to cover, in addition, we'll also be looking at the strategies, the best that you can apply, of course, in our course. That is the fact that right now we are looking at actually this is one of the shortest semester, because where we are sitting now, we're looking at 2 months and some 3 weeks, because your exams, remember, are scheduled to be conducted from 1st December. So literally we're looking at like 2 months and of course some 3 weeks. So it is a very short semester that will require us to apply a very good strategy to make sure that we are through with tax. Other than just being through, it will also give us that chance to do our revisions. So this will require a very good strategy that we must always tend to apply. So in overview, this is what will be expected to cover when you hear about overview of taxation. You'll find that tax, by the at this level, it has got roughly like only 9 topics. 9 topics. And out of these 9 topics, you realize that like 3 or max of 4 are computation. The rest are basically theory. So that is to say, we need to have a very good strategy that we can balance between, of course, the theory part and what? And of course, the computation. So considering this, we start by looking at topic number 1. Topic number 1, what will you be expected to understand? Number 1, we'll be expected to talk about taxation of business income and specialized business activities. So now about taxation of business income and of course specialized taxation of business income and specialized business activities and specialized business activities. So we are using a very long term, but ideally what will be expected to cover here is always about partnership. See, it's always about what? Partnership. And we are very sure now when it comes to exams, partnership rarely to miss. Give a chance of like 1% for it to miss in your exams. So meaning that topic number 1 is very important and very key. Topic number 1 is very important and very key. We go to topic number 2. What will you be expected to cover in topic number 2? Topic number 2, my good students will be expected to understand or to cover limited companies, taxation of limited companies. So taxation of limited companies, this is the longest topic that we'll be having. This is the longest topic that you're going to cover here. This is the longest topic that you're going to cover. And when it comes to matters to do with the examination, we find that in regard to computation, a huge chunk will come from topic number 2. So it is a topic that it is the longest, and also when it comes to computation, a huge chunk will come from topic number 2, because you find that it is at this point that you'll be expected to learn and understand the whole idea to do with normal taxation of limited companies. And the limited companies will also be talking about aspects of charitable institutions. We have, of course, cooperative societies, taxation of banks, taxation of insurance. All these elements will be expected to cover, of course, in topic number 2. So that should take us to topic number 3. And topic number 3 is something that you are very familiar with. This is value-added tax administration. Value-added tax administration. So this is a normal VAT. This is normal VAT. So what will be expected, of course, to cover under VAT, basically just to understand, of course, the whole process, including obligations, talk about the aspect of application of relevant laws under VAT. So it is more to do with the normal VAT that we are used to. As I've mentioned, that this is more of a very practical paper, because VAT is something that we do in our businesses every day. It is something that we normally tend to hear in our news every now and then. So you find that understanding the whole idea and the concept behind it. So even if at all you move outside and rather you want to apply this knowledge practically, it will be very easy for us. See? So that should take us to topic number 4. What about topic number 4? Topic number 4 in this context will be expected to understand the whole idea to do with tax investigations. Very practical. What will you be expected in this case? Remember, you're handling a situation whereby you're having a client, and this client has been suspected by the Kenya Revenue Authority for not probably submitting correct returns. So this person maybe is under investigation. You are engaged as a tax consultant to assist this individual. Now, what will you be expected to do? Probably there's some tax investigation in relation to some tax in arrears. Now you come and determine the actual tax amount and you need to advise your client. So again, this is a very interesting area. When you reach here, you realize that this part is very, very interesting, very interesting, which in this case we find that majorly will be relating with what is happening, of course, in the field. Will be relating with what is happening in the field. So topic number 4 is one very interesting topic that all of us, I know, we're going to feel and see how interesting that part will be. So that should take us to, of course, topic number 5. What will we be expected to cover in topic number 5? Topic number 5 now is all about aspects to do with what we normally refer to as a tax dispute resolution mechanism. Tax dispute resolution mechanism. And you realize that when you are talking about tax dispute, more so the season that we are in right now, you'll find that a lot of taxpayers are complaining that they are receiving some assessment from KRA, probably because maybe they were or they ignored some of the items that were supposed to be considered. Sometimes you'll find that probably in this case, you've been engaged in aspect of tax evasion, it has literally been proved. So you're charged with responsibility of you maybe paying for the same. What are other alternatives that are outside there that will help us, of course, to go and solve these issues and cases amicably without going through the process of court, which will take us a lot of time. So this is what will be expected to cover under tax dispute resolution mechanism, understanding what are the alternative dispute resolutions that are outside there that you can exploit other than us just running to court and maybe solving issues in court. So under tax dispute resolution mechanism, again, you'll find that it is also a very interesting bit. As I told you guys, most of the items that you're going to cover here, they're majorly practical because there are things that do happen. So that should take us to topic number 6. What will you be expected to cover in topic number 6? Topic number 6 here, we'll hear about taxation of cross-border activities. Taxation of cross-border activities. Taxation of cross-border activities. Where in this case, you're earning an income in Kenya, and probably you also have another income that you're earning from abroad. In this context, for tax purposes, how are we supposed to tax you as an individual? How are we supposed to consider the reliefs available? In this case, should you be subjected under aspect of double taxation, or what are we supposed to handle? So this is what we'll be covering, of course, in topic number 6. Looking at topic number 7 here, we'll be talking about what we normally refer to as tax planning. Topic 7, we talk about aspect of tax planning. So we have the aspect of tax planning, where with all this heat around, with all the wind around, what is the best way that we can plan for our tax and make sure that, of course, we are paying what should be paid. in terms of reducing our liability, but using the legal means available. We want to look at ways that we can reduce our tax liability using the legal means available. So that is what we'll be looking at that point. We have topic number 8. These are tax systems. Topic 8. We read about, of course, tax systems and policies. Tax system and policies. This is what will be expected, of course, to look or consider in this part, looking at the tax systems and policies, where we'll be talking about the types of tax systems, design of a tax policy. We'll also be considering maybe criteria for evaluation of a tax system. So literally what the government applies for them to collect specific taxes within the economy. So it will be important for us to be able to understand this thing in a very, very deeper perspective. So after we've considered that, our last topic here would be professional practice in taxation. Professional practice in taxation. So we have topic 9. This is a professional practice in taxation. Professional practice, of course, in taxation. Professional practice in taxation. So this will literally be our last topic, understanding professional practice in taxation. So by the time we are through with our semester, we should have, or rather we are expected to have covered all these topics. And the most beautiful part of it, you'll find that where it will take us a lot of our time is topic number 2. These are the theory part. These are the theory part, not theory but computation part. Talk about topic 1, 2, 3, bit of tax investigation because of the concept of back duty. So it is a balance of 50%, actually like 70% theory, 30% computation. We have taxation of cross-border activities. Again, you'd find that it is a blend where we consider almost 60% theory, 40% computation. So purely theory, we have topic number 5. We have, of course, topic number 7. These are theory part. So ideally, you'll find that there is that balance in taxation, which contains 50% roughly theory and 50% computation. So this is to clearly tell us that when we are dealing with tax, let our mind be at a balancing state, that we are not focusing majorly with computation and ignoring the aspect of theory, because you can clearly see that there is, of course, that balance of theory and, of course, computation. So that is very important for us to be able, of course, to understand as we are introducing this part of advanced taxation. Very, very important for us. Very, very important for us. So, my good students, this is what will be expected to cover when it comes to advanced taxation. So, it is expected that we should be having the basic part of taxation. That is expected at this level, that at least we should be having the basic concepts of taxation. But what Mwalimu normally assumes is that we have never attended any class for tax. So that is to say, Mwalimu will take us through, again, part of the basic and major elements of tax that you must be able to understand. Mwalimu will take us through major concepts of tax that we should be able to understand. That is what you're going to do, looking at, as much as it is expected, yes, that by now you should be having the basic concepts of tax. But Mwalimu is assuming that we've never attended any class for tax, so we're going to start basically from scratch, looking at some of the major basics that we should we should be having. So that is very, very important. That is very, very important. So looking at it at that point, then I want us to jump to the next element, whereby I want us to talk about the strategy. The strategy that will help us to make sure that we are through with all this, of course, within the shortest time possible. So what I'm going to do, you see the theory part, all this theory part, I'm going to share with us as you're starting the class. All the theory part, I'm going to share with us as we are starting our first class, so that you have them immediately as you're starting the first class. The other part, I'll expect cooperation from you. I'll expect cooperation from you. What is this cooperation that Mwalimu is talking about? This is a cooperation. All of us, I know we have an account in our platform. I'm sure that all of us, we have an account in our learning management system. So this is what I'm going to expect from us, because majority of the items that I'm going to share with us here, it is exactly what we have. So Mwalimu is expecting us to do this. If you go to your account, of course, we have a CPA. What we have, we go and search advanced taxation. Here you go, advanced taxation. You'll find that what we have provided there basically are, first of all, you can have a chance to review what we did last semester. Everything that we did last semester, you can be able to have a chance to review. And the beauty part is that whatever that we did last semester, it is aligning, of course, with the review that CASNEP did. Remember, CASNEP did a review last year, June 2024. So you will realize that whatever that we have here, it is aligning, of course, with that syllabus. So you can have a chance to go through in advance. In addition, you'll also be able to look at the topics arranged topic-wise. Say, maybe tomorrow Mwalimu is saying that, you know what, we are going to study topic number 1, and what we are going to handle is conversion of partnership. I'm expecting us, because we have this in advance, you go to conversion of partnership into a liability company. There are these videos that you can literally watch, so that when I come to class, we are not starting from the point of zero. At least you have an idea of what you are going to cover. You know, this will help us in a case that it will reduce probably questions that we might be having. It will help us in a case that it will reduce the time of us asking questions or probably feeling that there are concepts that we need to get clearly. It will help us a lot when it comes to that case. And that's why I normally encourage, because you normally tend to have that chance, mostly you students of Mdarasa, at least to study in advance. So I'll expect that cooperation from us. At least we get chance to go through these classes in advance. Now, after we have this, the next element that Mwalimu normally tends to do before we start anything, I wish to take us through the basic concepts. I wish to take you through the basic concepts. But before that, is there anyone with a question where you feel like, Mwalimu, me, I need to ask a question? Anyone with a question? If at all you have a question, this is the best time to ask before we jump to the next element. Lucy, Lillian, Phil, we have any question? If there is, you can always unmute and ask question. Great. So as you are starting, of course, the basic part, or as you are looking at taxation and looking at the basic part, we're not going to start from topic number 1 directly, because we, or Mwalimu knows very well that once we are good with the basic part, moving forward, tax will always be very easy. The reason why you'll always find that our students will always tend to, actually like almost 95%, they'll always tend to pass tax. Simply because the concept is that we are not looking at it on an angle that you know tax. We are starting from the basic part that we need to understand, first of all, what is the backbone of taxation? What is the heart of taxation? Remember, I always use this analogy whereby if you're only having an issue with your heart, you'll be living a long life. If you're only having an issue with your heart disease, or so long as you're having an issue with your heart, you'll find that literally you'll always be living a very uncomfortable life. The same case with the aspect of the basic concepts. The moment you don't get the basic concepts right, then that is where you'll always find tax to be somehow a challenge. But tax is one of the easiest paper, even more than audit, to pass, if at all you're having the basic concepts right. That foundation, that backbone is usually very, very key. So what is the heart of taxation? What is the heart of taxation? That is what Mwalimu would want to consider here. The heart of taxation. So term it as the foundation. Term it as the basic concepts of tax, or simply foundation, basic concepts. Or we're looking at foundation. A house without a good foundation, it is prone to fall at any given point in time. But with a good foundation, the house will always stay very strong. So before anything else, what do we need to make sure that we are good in tax? Before anything else, what do we need to make sure that we are good in tax? Number 1, a very vital element in taxation. Vital, very vital. We talk about understanding the concept of taxable and non-taxable incomes. B, understanding the concept of allowable and non-allowable expenses. Number 2, it will be very important for us to be able to understand taxation of other sources of income, or simply we talk about investment incomes, where majorly our focus will be directed to understanding the aspect of dividends and interest. Number 3, you must be able to understand approaches of determining taxable income. Approaches of determining taxable income. It will be very important for us to be able to understand this. Approaches of determining our taxable income. Where, in this case, we normally consider two approaches, which would be looking at them. That is reported profit approach, reported profit, and talk about the gross profit approach. So these are the two main approaches that you must make sure we have in our fingertips. Everything in taxation, more so where we have in computation, like 90% will evolve around you knowing which approach to use. Like 90% will evolve around you knowing which approach to apply. So this is a very important concept that we must mark it with an asterisk, indicating you cannot do without this. Because understanding the approach, that is what will determine what you're going to earn. Understanding the approach to use, that's what is going to determine what you're going to earn. Number 4, you cannot do tax without understanding capital allowances. You cannot handle tax without understanding capital allowances. And of course, considering the changes that were done. Number 5, the other basic concept in tax that you must be having at your fingertips, we talk about VAT. And the most beautiful part is that you find that VAT, it is amongst our topic. You find that VAT is amongst our topic. VAT is amongst our topic. So at this point, what Morimo is trying to tell us, my good students, is that I can tell you without any doubt, once you are perfect or once you understood this concept well, tax will be a walk on the park for you. That one I can tell you with a lot of confidence. That one I can tell you with a lot of assurity that once we are able to understand this, and you guys are going to be my witnesses, as you'll be going forward or looking at these questions, you'll always find Mwalimu referring to these elements: taxable, non-taxable, allowable, non-allowable. Is this qualifying, non-qualifying, or exempt? In this case, capital allowance, which class, which category? We are given a question, which approach are we going to use? That will be our song all through. That will be our song all through. I can assure you that. And you're going to see how we'll be looking at it. That will be our song all through. All through. That will be a song all through. Where you feel you're having a question, make sure you ask, of course. Where you feel like Mwalimu, kindly try to explain here further so I can be able to get it right. This is the best time for you. This is the best time for you to ask such questions. Because I want us to dive into understanding mostly this first part, then I'll leave you guys to go through whatever I've shared, because this is very key. This is very, very, very key. Very, very key. Great. There's that document that Mwalimu has shared in our group. A very good document that Mwalimu has shared with us. And all of us, I believe, we must be having this doc. I've literally shared in the group. All of us, we must be having this doc that Mwalimu has shared in the group. This doc, if I were you, I would have saved it on my email and star it. Mark it as favorite. If I were you, I'll have saved that document on my email and mark it favorite, because this is not only for class. This document is not only for class, but also what you'll be doing outside here. If I were you, I would have saved this document on my email and mark it as favorite, because it is a very important document for us. Very, very important document for us. So before we dissect that document, I want to explain, and I'll be using the same, of course, to go through the class. So we want to start with the first basic foundation of taxation, understanding these key terms, that once we are through, or once we are done, you'll find that it will always be very easy, of course, for us to handle anything when it comes to this case. See, so then let us have this, understanding the basic concept of tax. This is what I want us to have. So the basic concept we've agreed, number one, we want to look at these key elements. 1A, taxable and non-taxable incomes. Taxable and non-taxable incomes. Now, one key element to be able to understand, where we start by looking at taxable income. What is the taxable income? Very important, and I'll give you a trick on how you can always be able to identify taxable income anytime that you come across such taxable income. So when we are looking at taxable income, and good students, what do we need to understand? Just as the word suggests, yeah, taxable. So we are looking at these incomes. These are incomes that are subjected what? To tax. Incomes that will be subjected to tax, or incomes that are subjected to tax. Taxable income, incomes that are subjected to tax. And how will you identify that this income is subjected to tax? Number one, you'll find that maybe you're operating your business of selling probably electronics. There's an income that you're going to generate from that business that you're operating. Ideally, that on its own, it is an income that you generated from your business, so therefore subjected to tax. In your line of business, of course, there are incomes that you're going to get which are directly relating to your business. Say, for example, you've been given a discount, meaning that on your end, this is a discount received. What will happen? This discount received is taken as an income. Why is it taken as an income? It is taken as an income because it is a saving that you're getting. You could have spent that amount, but what is happening? You are given a favor for you not to spend that amount. So it is a saving that you're keeping. Taxable income. See, at this point, probably during your day-to-day operations, there are some debtors whom you have written as bad debts. In your mind, you'll always be like, these debtors will not pay me. But what happened? They are blessed. Yeah, you prayed and God heard your prayers. So these customers, they want to pay whatever that they were owing you, which you are treated as bad debts. So you're about what? Bad debts recovered. This is an income already that you're getting. because you are also maybe good in investment, you decided like, I'm having some capital here, I want to construct rentals. You are earning some rental income here and there. Yes, it is not relating with the business that you're doing directly, but it is an income that you're getting somewhere. See, you have invested probably in some certain companies whereby there could be probably interest and dividends, which in this case you'll be looking at them specifically. Remember, not all dividends and not all interest are subjected to tax, but probably these are subjected to tax. See, so the entire concept behind taxable income, we just want to look at the incomes that will be subjected to tax. These are what we're referring to as taxable income. And at this point, Mwalimu has given us a very, very clear notes here. Say, Mwalimu has given us very clear notes here, whereby considering our taxable income, of course, in this context, we're looking at number one, we're doing about gains from ordinary business of buying and selling, your normal operation. We're doing about, of course, gains or profits from a business currently owned by a resident person, partly in Kenya, in partly outside Kenya. That is very important to note. We're also considering the fact that we're about insurance compensation received for loss of stocks or profits. And kindly underline the word stocks or profits. Underline the word stocks or profits. This is what you're looking at. Because you might get insurance compensation for a motor vehicle that had an accident. Will you take that as an income? No, Mwalimu will be explaining that as we proceed. So that's what Mwalimu is saying, or is insisting we underline the term stocks or profits. We have discounts received from creditors. Mwalimu was saying that this is like a saving that you're having. So therefore take it as a taxable income. We have a deduction or reduction in specific provision for bad debts. This is a very key element. And let me analyze this. Actually, this one you can also have it in our papers. You can also have it, of course, in our books. I want to give you analysis of bad debts. We'll be referring to this. Analysis of bad debts. We will be referring to this, my good students. Throughout our course, we will be referring to this. Throughout our course, we'll be referring to this. Analysis for bad debts. What do we need to have? We understand that bad debts, I'll be looking at it in two perspectives. I'll be looking at it in number one, bad debts written off. Bad debts written off. We'll also be talking about number two, provision for bad debts. Provision for bad debts. See. So let us look at bad debts written off. In this case, you've literally said that Meshach will not pay me this amount, or Lucy will not pay me this amount. You are sure that Lucy has been declared bankrupt, so Lucy will not pay me this amount. You are sure. That is written off, which in this context, which I'll be explaining as we proceed, this is allowable expense. We have provision. Provision, this is expected. I am expecting Lillian will not pay this amount. I am expecting Meshach will not pay this. I'm expecting probably Phil or Lucy will not pay this amount. I am expecting. It has not yet occurred. I am anticipating that this will not be paid. So that is provision. I am anticipating, I am expecting. And these expectations are categorized into two. The first one, we normally refer to it as general provision. And number two, we normally refer to it as what? Specific provision. Provision for bad debts, if you are told nothing, you're just told provision for bad debts, will always assume it is general and therefore you take it as non-allowable. I'll be explaining these terms. You take it as non-allowable. General provision, in this case, you are just given general without giving anything. We take this as what? Non-allowable expense. So under general, I'll be looking at it in two perspectives. I'll be looking at increase and I'll be looking at decrease. So where we have increase in general provision, and what is this general? I am anticipating a class of advanced taxation class, 20% will not pay their debt. Advanced tax class, I have put them into one bucket, all of them. I have generalized them, the concept of general provision. I am putting all of them together. Advanced tax class, say like 20% will not pay. That is general. Where we do have increase in general provision, we term or we take it as what? Non-allowable expense. Where we do have decrease in general provision, in this case, will be taken as non-taxable. So where we talk of increase in general, non-allowable, decrease in general provision, non-taxable income. You see? We have specific provision. Specific, we mean Meshach will not pay 20% of his debt. Lillian will not pay 5% of her debt. We are looking at an individual person. Remember, general, advanced tax class or taxation class. Specific, we read about Meshach, we read about Lucy, we read about Lillian, we read about Phil. Being specific. Being specific to an individual. So you're saying that specific provision, when you are given like that without any explanation, we have it as what? Allowable expense. We have it as allowable expense. Where you're not given any explanation, you have it as allowable expense. Talk about, in this case, we can consider either increase or decrease. See, we can consider either increase or decrease. So where we have increase in specific provision, we are going to take it as allowable expense. And where we have decrease, this is going to be taken as taxable income. Where is a question, you don't have any other time, this is the best time to ask your question. You don't have any time to ask other than now. This is the best time to ask a question or you feel like, mwalimu, kindly, kusema ukweli, explain here. Explain here. Explain here. You're not getting it right. Say, mwalimu, to be honest, I want you to explain here. Mimi sijaelewa, I've not gotten it right. And the reason why you can see in our document here, look at this, look at this. See, we have it here. Deduction, that is reduction. Deduction is same as reduction in specific provision for bad debts, where we have considered it to be part of what? To be part of taxable income. Recoveries of bad debts which were previously written off were allowable. A realized foreign exchange gain. I'll also explain foreign exchange gain. So, dissecting foreign exchange gain. I want to raise here. Can Mwalimu raise this point? Are we done? So that Mwalimu can erase? By show of hands or thumbs up, that will show that Mwalimu should erase. Should I erase this point? I need us to analyze, of course, foreign exchange. Great, great. So, what about the concept of foreign exchange gain? It can either be gain or loss. This is the case. Look at foreign exchange. Foreign exchange. So, on a foreign exchange, we can either have realized or unrealized. These are two possibilities. I'll start by, first of all, understanding the whole idea, how foreign exchange more so when we're about what aspects of gain or loss will occur. So we talk about realized gain, for example, and unrealized gain. We start with gain. So at this point, I'm doing probably a business with someone outside the country. On the invoice date, probably, we did this, maybe I was issuing an invoice when at this point, probably 1 USD to Kenya shillings, we're about say like 130. That is the invoice date per unit. So when this person is paying me on the payment date, probably Kenya shillings has lost value. We're about say like 140. That is when I am being paid. See, this person will be paying in dollars, but we're about the exchange now. So that is to say, comparing my invoice date and the payment date, for me, person who's in Kenya would be receiving this, I'll be earning 10 per every unit that you're selling. Per every unit of the USD, I'll be earning at least 10 compared to the invoice date and the payment date. So this will translate that I'm having a gain. But at what point will we say that it is realized? When the actual payment has occurred. When the actual payment has occurred, that is when you are going to say that this is a gain. When the actual payment has occurred. That is when you're going to say that, this now is a gain. when I am anticipating to be paid, I am anticipating that by the time I'm going to be paid, probably this is what the dollar will be going or will be trading. In such an event, we are anticipating and realized. So realized foreign exchange gain, this is a taxable income. Unrealized, it is non-taxable because it has not yet occurred. I'm only anticipating. So you'll always be very keen. You'll always be very keen to look at how are things happening at this point. Is the examiner, or are you given realized, or are you given unrealized? That's a very important element to note. What about loss? Take it the opposite. Maybe 115 here on the payment date. The invoice date was, say, like 130. When I'm being paid, probably it is 115. So you're looking at a loss of 15. So loss, many a times, of course, you're going to count it if at all it has been realized. So foreign exchange loss, then we will be taking it as what? Allowable expense, which we're going to look at it. We'll be taking it as allowable expense, that is foreign exchange loss. We'll be taking it as allowable expense. So that is also very important for us to be able to do it, to understand. So that's the reason why in our document, that's the reason why, if at all you can check in our document, we've said that number 7, we read about realized foreign exchange gain. We read about realized foreign exchange gain. That is very important to note. We have the other element, trading receipts or a balancing charge, when the assets of a class are disposed of for value which is greater than their retainable value. Of course, that one will be analyzing it as we'll be looking at what? As we'll be looking at the capital allowances. So my good this is just but the intro part. I don't want to give you a lot of things today. What I'm requesting us is that go through that document. Go through the document that Monimu was shared. So that actually today was just like an overview, what you'll be expecting. Actually, I've even gone deeper. I've even gone deeper in the first class. The first class is usually, of course, understanding the overview. So you go with that bit. Then in this case, you'll find that it will help us a lot to understand. So again, also, as I mentioned, this semester is very short. So what we've done, we've adjusted our timetable. We're going to share the updated timetable in the group. We're going to share the updated timetable in the group. We have just adjusted the same, which would give us at least, we'll be having not 2 sessions, but at least 3 sessions in a week. The third session will always be for revisions purposes, whereby we'll be using that strategy whereby we have the first 2 sessions, normal classes. The third session in a week will be using it to revise. So that's why Mwalimu has mentioned that we have done some adjustments in our timetable to cater for these revisions, because remember, time this semester is very short, so we need to at least employ other strategies that will help us to make sure that you're done with all these items in advance and also provide us with time to do our revisions. So I'm going to share the updated timetable. I'm going to share the updated timetable with us, at least adjust with the timetable. And in this case, we find that we'll be having a very smooth ride during this semester. We'll be having a very good smooth ride during this semester. So that point, guys, let me share more in our group. And I want to wish you a very good night and see you in our next class. Bye-bye.